Hi, I'm Caesar Bryan, and I'm the portfolio manager of the Gabelli Gold Fund. And we're here to talk a little bit about gold and gold equities. So, as we speak, in the second trading day of 2023, gold is trading at around about $1,855 an ounce, which is up about 15% from its low in the third quarter of last year. Gold has really been in a trading range for the last almost 3 years at around about this level. Remember that the price did go above 2,000 twice, once during at the start of the COVID pandemic, and then last February, when or March, after following the Russia's invasion of Ukraine. But basically, the price in dollar terms has been in a trading range. For 2022, gold was basically flat. However, it did appreciate because of the strength of the dollar in foreign currencies. And gold equities were down about 10% last year, underperforming gold bullion. Of course, gold equities everywhere were weak last year. So what's the outlook? I think there are a couple of things that we need to pay attention to. I mean, forecasting is really a hazardous business these days on a macroeconomic level. But for gold, obviously, the actions and policies of central banks are very important. And there are a couple of factors just to bear in mind. One is that, of course, central banks have tightened monetary policy at really a very rapid rate compared with the past. And second, and this is different from the past, there are very high levels of debt, both government and private sector, throughout the world. And this really, we believe, will provide a constraint to the freedom of activity of central banks to tighten significantly further during this cycle. So we think gold is a good hedge against any central bank error, both in terms of raising interest rates, tightening too much, and also if they pivot and relax policy due to debt levels and a weakening economy, we think gold is a good hedge against that, especially if the dollar declines. And one other thing just to throw out there is that the Central Bank of Japan, the Bank of Japan, has made a major policy change, did make a major policy change at the end of last year when they changed their ceiling on the 10-year Japanese government bond yield to 50 basis points from 25 basis points. So that was the first move from a central bank that hadn't tightened in this cycle as yet. Secondly, I think it's important for investors to pay attention to the geopolitical scene. If you remember, after the invasion of Ukraine, the Russian assets, central bank assets, reserves were totaling about 300 billion were frozen by the US, and that has led to a re-examination by many countries of their reserve policies, and that has led to banks and foreign governments adding to their gold reserves. And in the third quarter, 400 tons, as estimated by the World Gold Council, was purchased by central banks, and that was a record going back many decades. So this is a trend that's likely to continue. More recently, there's been an effort, or there are efforts by both Russia and China to try and lessen the role of the dollar in international settlements and indeed international trade, including the oil trade. Moving on to gold equities, which is what we do. We invest in gold mining equities at Gabelli. Just a couple of points. One is that they're inexpensive relative to their history. First. Second, we think the fundamentals are improving. They're generating free cash flow. They pay dividends, and actually cost pressures, which have been quite high recently, seem to be abating. Oil, diesel, and other input prices and costs are coming down, which should lead to higher profitability. And if the gold price continues to appreciate, that will, of course, help immeasurably as they're hedged, as they're levered play on a higher gold price. And then just one final point, worth remembering that gold equities are about 50% off their highs of over a decade ago. So this is not a sector that is particularly overowned or overloved. Thank you.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.